So welcome to the HKS Energy Policy Seminar. I'm Joe Aldi, and I will serve as the host for today's seminar. We're operating the seminar series this semester in our hybrid format. Pleased to have everyone joining us here in Rubenstein 414, and also pleased to have our friends and alumni and colleagues joining us on Zoom. We're thrilled to host Ethan Zindler for his talk today, Viva la Tranicion. Ethan leads country and policy research at Bloomberg New Energy Finance, BNEF, a provider of data, research, and analysis on virtually every dimension of the low-carbon economy. Previously, he served as climate counselor to U.S. Treasury Secretary Janet Yellen. Ethan advised the secretary on a broad range of climate-related issues and oversaw the Treasury Climate Hub, which led key Treasury initiatives on the Inflation Reduction Act, on formulation of trade tariffs, and on producing a study on the climate change impacts on homeowners insurance. Prior to joining Treasury, Ethan served as head of Americas at BNEF, where he managed analysts in New York, Washington, London, and Sao Paulo. He was instrumental in the creation of Climate Scope, which tracks clean energy investment conditions in emerging market economies. Ethan, welcome to the Energy Policy Seminar.
Thank you. Thanks. Can you hear me? Cool. Hi, everybody. Joe, thanks so much for the introduction, and thanks for hosting me, and thanks to the centers as well for having me here today. It's great to be with you all, and I'm not going to speak any Spanish other than the title of this slide, which is lucky for you. But I called this talk Viva la Transición because and I was just saying to Joe beforehand, if we're honest, and you think about the transition to lower carbon energy technologies, the push to address climate change, and the things that frankly I care very deeply about, last year was terrible. From a policy perspective, it could not have been a whole lot worse than what we saw in terms of some of the moves from the Trump administration on multiple fronts. And internationally, the multilateral process associated with climate negotiations, it was a tough year as well. So I offer all that, and I don't want to dwell too much on last year, but mainly the point that I'm trying to make in my talk is that despite all of that, if you look into the private sector, which is the world that I primarily operate in now, there's a lot going on. And some of it is quite positive still, and there's a lot of transition activity and investment that is, frankly, at this point, the momentum is so big that it's hard to see how it stops ultimately. So I'm going to talk a little bit about the research that my firm collects and try and provide some kind of context in terms of the global efforts to address climate change. Real quick, in terms of what BloombergNEF is, we are a research division of the company Bloomberg LP. We track trends across the energy transition overall, and that has really a whole ton of sectors. I'm not going to go through all these nice little icons here, but we track really every aspect of the energy sector, but with a real emphasis on what we would call energy transition technologies, which would be renewables, batteries, electric vehicles. We also spend a lot of time trying to think about the sort of next generation of technologies to decarbonize processes like steel production. We focus on hydrogen. So really kind of across the piece. We've been around for about 20 years. I've been with the firm more or less that period of time, other than the 2 years when I served in the Biden administration Treasury Department. And so what we've really tried to do is apply an economic lens to this industry and do the kind of fundamental research related to clean energy that people have long done associated with oil and gas. And that doesn't really sound like a particularly novel idea, I know, at this point, but when we started the company 20 years ago, it was, because wind and solar and batteries and EVs were such a tiny, tiny world, there wasn't that much to look at. So what I'm going to talk about today, again, a little bit of a level setting on sort of where I think we actually are. Then second, looking a little bit ahead at what I've called the new era of demand. And we really have arrived at an interesting point where demand for electricity in particular in the United States is rising very quickly. And then finally, a couple comments about the longer term challenge and where all this momentum is so far has gotten us in terms of addressing climate change. All right, so in terms of where we are now, as a framing, I'm going to talk about money, a lot about money, because one of the things that our firm does is we count the dollars that are invested each year into the energy transition globally. And I'll talk through each of the kind of major pieces of capital flows that we've seen, but I'm going to kind of diverge off each chunk of them to kind of talk about some of the dynamics that we're seeing in these industries. So first, on a global basis, the total amount of money that went in last year into the energy transition actually hit a record of $2.3 trillion globally. This was the most that we had tracked in the 20 years that we've been doing this. The rate of growth has not been particularly spectacular. You can see year on year, but nonetheless, if you total it up globally, it's quite a lot, and it's up about 11% year on year. When you split that out into the various chunks, because that's obviously a lot of money, there's really maybe three main pieces. One, clean energy, which are these blue bars down here, which includes renewables, includes nuclear, CCS, a few other things. The second, this big purple bar, and a few others associated, which are transport related. And then up at the top, you can see yellow is buildings, and then ultimately at the top is grids. And I'm kind of focusing on three main areas here, which is clean energy, transportation, and grids, because that's where most of the money has flowed so far. So let's kind of take it one by one here. First, let's talk about renewables. Last year, in terms of total amount of money that went into the industry, it went down a bit to about $700 billion. That's about a 10% drop year on year, which obviously doesn't look like great news when you look in the broader context of addressing climate change. But I think it's important to note that the costs of clean energy have been dropping really rapidly. And so counting dollars doesn't really tell you the entire story. So this is the cost of a typical photovoltaic system, a large-scale photovoltaic system, the kind you'd see out on the grid, providing power. The price as recently as 2015 was $1.85 per watt. We're now down to under 50 cents per watt. And you can see that year on year, we saw another decline here of just maybe a couple percent year on year drop. But overwhelming capacity manufacturing that we're seeing mainly out of China is continuing to put a lot of pressure on pricing. And then if you look at how much stuff actually got built, again, that's on the right-hand side here, we built about 650 gigawatts of capacity of solar around the world last year. For general context, the US has about 1,300 gigawatts of installed capacity now, maybe a little bit higher at this point, maybe 1,400. But that's a lot of capacity that's now being built around the world. And in terms of where it's happening, about half the market is red here. That's China. And the scale of the build out in China is just almost mind-boggling in terms of the amount that we've seen. However, we at BloombergNEF do expect that the solar market in China is going to start to level off this year. Storage is also a really important part of the story. And I realize we have some folks here who probably know all about energy technologies, some who know a little bit less. So I'll sort of explain from the bottom up, but storage is absolutely critical to addressing climate change, I think, fundamentally, insofar as it allows some of the zero carbon technologies that generate power like solar to provide power for more hours into the grid. Storage also provides a lot of other services on a typical power grid, but that just as a start, that's one of the things that it does that's really important. And again, we've seen this really nice and very dramatic decline in the price of a typical battery pack from about $170 per kilowatt hour to under 110. We think it'll probably drop a little bit more this year as well, but could tick back up just slightly. But nonetheless, there's been this very sharp drop. And then when you look at the amount of capacity deployment, again, when you look at storage additions, we hit a new all-time high last year with about 250 gigawatt hours of storage. Again, the pattern of the bars is similar. A lot of red, a lot of China that you can see, but also blue, which is the United States there afterwards. So a major scale up in storage as battery costs continue to decline. All right, so let's talk about the second kind of chunk of that 2.3 trillion, and that's related to transportation. So there was about $900 billion in capital flows into electrified transport last year. The vast majority of that number that you're looking at is money that people spent on buying electric vehicles. And so we've seen a very sharp growth globally in that of about 21% year on year. This is a market that's rising very quickly. The drivers behind it, well, there's from the consumer perspective, there's more vehicles, they're lower cost. I drive an EV, I can make an argument that it's a better performing vehicle, it's more fun to drive, all those things. But there's also been a lot of policy support along the way. Namely, in China, we've had the new energy vehicle credit system, there's fuel economy standards, there's city policies, there's tax incentives. In the EU, they have emissions targets. They have various national targets as well. And then there's the US, where we had the CAFE standards, for those of you who know, the corporate average fuel economy standards. There were very generous tax credits extended in the Inflation Reduction Act. And then there's the California zero emission vehicle mandate. The good news for China is that a lot of this stuff is still in place. In the EU, we've started to see some wobbling around their emissions targets. And then really in the US, the backsliding, to kind of come back to my original point, on the US, last year, the Trump administration essentially declawed the CAFE standards. You can't get punished for violating them, essentially. The tax credits for electric vehicles ended on October 1st of last year as well. And now the California ZEV mandate is also under attack. So the regulatory outlook in the US has really dramatically darkened. It has not, however, in China nearly as much. And if we look at where the EVs are actually being sold, last year about 22 million of them were sold around the world. 14 million of them were in China, as you can see, much smaller chunks on top. And if you look at the level of penetration, I mean, I find this chart kind of amazing. We're now up over about 60% of all the cars that are being sold in China today have some kind of a plug in them. So they're either a plug-in hybrid electric vehicle or they're a pure electric vehicle. Globally, we're at about 1 in 4 cars that fit that category, partly because of a result of China. And then the blue line at the bottom, which is a little hard to see, is the US. And you can see that we're kind of crescendo or peaked at about 10% overall. One thing to note, though, is as we look in the broader context of automobile sales, is that we actually saw essentially peak internal combustion engine car sales all the way back before the pandemic. And we're not really going back to that anytime soon. So from a sort of a positive climate perspective, you can see here these gray bars. We had about 80 million ICE vehicles or internal combustion engine cars sold. Then we had the pandemic, and you saw all car sales drop down a lot. But since then, basically, we're now almost about where we were before in terms of the total number of cars that are now being sold. But most of the new stuff that's being sold are hybrids, plug-in electrics, or battery electrics. So in terms of actual ICE cars, they're down 25% since their peak in 2017. And there's little to suggest that that's going to come back. I kind of offer this all up as a little bit of a context of the conversation that we're now increasingly hearing out of Washington and Detroit about coming back and wanting to have the US, be a leader again on ICE vehicles. That is the direction that we are certainly hearing policy-wise. That's the direction we're hearing out of the big 3 automakers increasingly as well. But the rest of the world is moving in a pretty different direction, and they're doing it pretty quickly. It's not just cars, though, and I think this is a story where if you're based in the US, and I know we have a pretty global audience here, so people probably know some of this, but if you're based in the US, I think you'd be surprised to know that about 40% of all the buses that were sold last year around the world were electric buses. We don't see very many electric buses in the US, or even in Europe, really, that many, but mostly this is due to China. About 40% of the 2 and the 3-wheelers that are sold around the world are electric, particularly in Southeast Asia. The vast majority of these vehicles that are on the road are electric. And again, at passenger cars, it's about 1 in 4. Light commercial vehicles, these are like the Amazon delivery vans, are about 1 in 10. And then the hardest to really make an impact, and from an emissions perspective, arguably the most important, is heavy-duty transport. And so far, we're only at about 5% of penetration there. The challenge of moving an enormous multi-ton load of freight and the amount of energy that's required to do it is very challenging, given the amount of battery you need to be able to get that vehicle from place to place. So we've seen limited penetration. Tesla, somewhat below the radar, has been working on an 18-wheeler truck for some time now. We're all, I think, kind of curious to see what comes next with that, but there's certainly been a lot of interest there, a lot more development to go. Just a side note, but along the way, over the last 5 years, And I raise this in the context of the sort of incredible importance that a number of governments place on the automobile manufacturing sector and the economic development opportunities that it represents. Along the way, over a 5 or 6 year period, China has become the #1 largest vehicle exporter in the world. And like with a bullet. I mean, it's kind of amazing. These guys, they were way down below. You see some of these existing automobile sectors in the United States and Europe and elsewhere. And a good chunk of this, of course, is due to electric vehicle exports. So I think they sold about 300,000 electric vehicles in China, in Brazil, almost all of which were from China and BYD. So they are now rapidly exporting into a lot of different parts of the world. One of the assumptions was that it's only going to be wealthy countries that can do electric vehicles, but increasingly we're starting to see middle-income countries as well, namely in South America, start to pick up on EV adoption pretty quickly. All right, so let's talk for a second about that last chunk at the top, which is grid. And so why would you call investing in the grid an energy transition investment? And the reason why we do is because a huge part of the effort to ultimately do a lot of decarbonization is going to involve, the so-called electrify everything movement. When you switch from an internal combustion engine car, for instance, to an electric vehicle, the amount of actual energy that's used dramatically declines. Vastly oversimplifying things here, but when you drive your car 100 miles and you put it in your garage and you put your hand on the hood, it's hot if it's an internal combustion engine car. If it's an electric vehicle, you can do the same 100 miles, put it in your garage, it's not hot. That's just essentially wasted energy that an ICE vehicle generates. It's an oversimplification, but I mainly pointed out just to show that as you electrify transport, it dramatically reduces the actual amount of energy that you need. So we do track grid investment because we think it's important as an enabler to the energy transition overall. And it's up about 17% year on year. And it's both a combination of demand for or growth of the grid to accommodate a lot of different things, namely data centers that I'm going to come on to in a minute. But it's also the fact that we're seeing a real squeeze on pricing of really big and kind of boring equipment like this transformer, which is being manufactured in Quebec. The prices of this equipment has risen very dramatically, and the level of imports has also risen very quickly to accommodate more electricity demand overall. So just quickly on countries, I've kind of touched on Asia. This isn't going to surprise you too much, but in terms of the total amount of money that's flowing into the industry, this red bit here is actually the entire Asia Pacific region. But if you look on the right side, the amount of money that went into China last year actually dropped a little bit to about $800 billion. Still an enormous amount of money. But there's some interesting things going on in China and the dynamics that are specific there. And I realize I'm talking a lot about China, but if you're talking about a global energy industry and you're talking about the energy transition, China is so massively important, both domestically, but also in terms of the influence that it has over the rest of the world. And one of the interesting things that's happening in China is there's sort of a reckoning going on within the manufacturing sectors over there. There's this enormous amount of new money that got invested in manufacturing that happened in 2023. It has since come down a bit, and that's part of why the dollar amount has come down. And one of the main problems in China at the moment is there's just way too many companies producing batteries, electric vehicles, and solar overall. That's frankly good for us and the rest of the world because it's helping to depress prices, but it's bad for them ultimately because you can't support as many companies as you have there. And just to illustrate this, without going through every detail, we looked at every major segment of the supply chain to make batteries, to make wind turbines, to make solar panels, to make hydrogen electrolyzers. And basically, long story short, in each one of these segments, the world has twice as much manufacturing capacity as there was demand last year. We were just at a massive overcapacity situation. You can see some of the situations are a little tighter, like the making of electrolytes that go into batteries or onshore nacelles that go into wind turbines. But for solar, which is this massive global industry, again, it's 2 to 1 overall. And if you look at electrolyzers, which is a whole other story related to making green hydrogen, the numbers are ridiculous. It's like 18 to 1, maybe higher by now. And of course, China is where all of this is concentrated. So if you look at each segment of the value chain, overwhelmingly, it's centered in China. And for most of these industries, it's a global traded world. So, overcapacity in China means that you can enjoy the benefits in other parts of the world. The main exception might be wind, where we don't see as much cross-border trade of wind turbines just because of the sheer size and the cost of moving the equipment. And like I said earlier, China is also increasingly focusing on developing countries. And I think the story of what's happening in emerging markets is really one of the more fascinating ones, because the pressing need for more energy, whatever your number is of 800 million or 1 billion people who still lack adequate energy access in developing countries, increasingly, it is clean energy that is the first access that people are getting. And China's very keen to help provide that. So if you look from 22 to 2024, these green bars here are their exports to low to middle income countries. So they may have started out trying to export a bunch of this equipment primarily to wealthy countries like the US and elsewhere, but over time, they've already been shifting more towards developing countries. There's a bunch of reasons for this. Part of it a little bit is tariff mania, although this predates the tariff stuff. But even in the Biden administration, for instance, we put 100% tariffs on Chinese-made electric vehicles. So we effectively closed the market to Chinese-made EVs even before Trump came along. So increasing China is looking for other opportunities elsewhere. And if we look around the world at what the most popular installed technology is, for the majority of countries in the world, the number one technology that they're installing now on a capacity basis in the electricity sector is solar. That's the yellow, how all these countries are colored. And about 86% of the countries installed more renewables than they did fossil fuels. This is actually from 2023. I don't think it's actually that different for 2024, probably 2025 as well. So good news, right? In particular, if you're thinking about these countries where energy access is a huge issue. A lot of the kind of initial access to energy that people are now enjoying is coming from solar. It's coming from cleaner sources, not from dirtier sources. All right, so we should talk about the US a little bit. I realize I'm talking a lot about China, developing countries, and obviously, to my original point, last year was not a great one in terms of the developments that we saw in the US. The main changes were the Inflation Reduction Act. Essentially, a lot of it was essentially overturned or repealed via legislation called the One Big Beautiful Bill Act, which was passed last July by Congress and signed, I think, on July 4th by the president. It undid a bunch of the tax credits that had been supportive, undid a lot of the work that a number of us had been doing in the Democratic administration as well. So in terms of the actual capital flows, though, last year, we actually saw the numbers go up a little bit in the United States. It wasn't like we saw a sharp crash overall. It's not, I wouldn't call it like a great victory here. I mean, obviously effects of inflation, a few other things in here, but the fact that the market did not really crater is a good sign. It also does reflect a fair amount of activity that went on as people tried to get stuff built ahead of new deadlines that have been set by the expiration of certain subsidies, thanks to action from the Trump administration. But basically, you're more or less in line here. Renewables more or less stayed the same at about 100 billion. Electric transport about the same. Actually, the amount of investment in grids went up a bit to $115 billion. So just to dig down for a second on one other aspect of capital investment. I've talked a lot, and most of those chunks are like money that goes into new technologies, but are technologies that have essentially been proven at an enormous scale to be adopted by consumers, whether it's putting solar on your roof or buying an electric vehicle or building a massive wind project, whatever it is. The real question as we think about climate change is, what about investing in the next generation of technologies that are going to arguably do the much tougher things that we need to do, which is to figure out how to produce steel with zero emissions, how to do any number of other, make cement or aluminum, other things like that. And the other thing is there's also a fair amount of need to continue to invest in the conventional technologies to make them better. So for instance, it's great that we've got batteries. They need to produce for more hours of the day, right? 2 to 4 hours of battery output doesn't help solve some of the bigger challenges that we have with the grid. So this is just a look at all the money that we saw invested in equities. So this is money that basically people have a higher risk tolerance for. It's not, these aren't loans, this is just money that's raised by companies, either privately or over the stock markets. And let me just zoom in on the yellow chunks at the bottom, because this was asked about before I started. This is venture capital and private equity investment in energy transition technologies. And this has been a tough world for the last couple of years. We topped out at about $60 billion, and we've been dropping ever since to about $27 billion over the last couple of years. It's nice that we're raising, you see that these purple chunks went up, and that's because like we're raising more money over the public stock markets for companies like BYD and others like that. But for the startups, which I know obviously are a very important part of the culture here in Cambridge and elsewhere, money has been tough to come by. And just to put that a little bit in context, if you look at the 7 biggest AI or the 7 most notable AI companies, I would say they alone raised more money than all the venture capital, private equity, and all the other equity raises in our space, in the clean energy space last year. So there is like a new shiny nickel, clearly, that is getting a lot of attention of investors. And I think one of the reasons probably also is because when you invest in energy technologies, it's not 3 guys in a garage, right? You invent the technology, then you have to test it in a pilot, then you have to test it at demonstration scale. You typically, as you move down the development of the company, the numbers of dollars you need to raise goes from millions to billions. AI looks a lot more like what I think a lot of Silicon Valley is used to in terms of some of these companies looking a little bit more like software. There is, however, obviously a lot of hardware that's required as well, and I'll come on to that in just a second. So in terms of demand, here you are. This is the great source of new demand in the United States. I took this picture a couple weeks ago. I don't think I was trespassing, but I went out. I live in Northern Virginia, and I went for a drive out to the horse country for a nice weekend with my partner. And along the way, though, we drove right down what is now known as Data Center Alley. And as you go through there are multiple of these giant cement structures going up. You can see that right before your eyes. This was a brand new one from someone called Cyrus One that was building. And this is suddenly, very much interestingly, almost out of the blue in the last 2 or 3 years, and really in particular in the last 6 to 12 months, has become right at the center of the energy discussion in the United States for a variety of reasons. First of all, beyond the energy world, the amount of money that is now being committed to build out data centers to improve all of our lives through AI is enormous. We're already at over $500 billion in counted commitments. This is actually not our numbers, but from other analysts. And you can see in terms of the amount of capital deployments that are being talked about into 27, 28, up over $700 billion in the United States, or sorry, around the world, but most of it, I should say, in the United States. To be clear, most of that money is actually not going to power the data centers. It's to buy all the chips and to put the cement in and all the other systems, but they still need a heck of a lot of energy to actually scale up to the kind of scale that we're talking about here. So just to give you our estimate, just to go back to energy for a second, if we look at the amount of electricity the United States consumes, we're at somewhere around 4,400 to 4,500 terawatt hours, maybe a little lower than that about now. We think you get up over about 5,000 terawatt hours by the time you get to 2030. And in terms of the source of the new demand, like you can see, basically life was pretty boring for a long time. Like electricity demand in the US has been pretty much flat as a pancake for 20 years. Now it's really data centers that's taking us up. That's the red chunk here. We think electric vehicles also will play a role, but to be honest with you, we'll probably in our next update to this forecast, reduce the EV number a little bit because we're just not selling as many EVs in the US as we thought we were going to. In terms of where it's going to get built, there's just a bunch of, I won't kind of walk through all the markets here, but most of it, or about half of it, is in the PJM market. And the PJM market is a giant 13-state power market that runs from the mid-Atlantic all the way up through the Midwest and includes DC, where I live as well. But there is really no consensus at all on how much more power we're going to need for all this AI. And I mean, the number of sort of known unknowns is, Don Rumsfeld used to say, sorry, it was an old guy reference, but is really high. And the first question we don't really know is like, how much compute power do we actually need? Certainly Silicon Valley will tell you it's an enormous amount, but we don't know about all the applications of AI and how it's actually going to get used. And then the second question is, how quickly does the hardware itself get more efficient? So each generation of new chips that's being produced, particularly by NVIDIA, but others, gets more efficient. And if it gets rapidly more efficient, then we won't need as much electricity as we need. So I'm just showing you this chart to give you a sense. This red line shows what our own forecast is for how much new electricity demand we think we're going to need. But this shows all the other forecasts and how completely all over the map they are at the moment in terms of how much demand that we might require. What I actually think I like best about this chart is we don't even have consensus on like how much we're using right now, let alone where we're going to be, in 10 years from now. So there's a big open question here, but that does not mean there has not been a substantial amount of freak out around what's going on in the market. And I think it is, frankly, somewhat justified given that we are actually seeing pressure on demand. And as we bring it into kind of the realm of politics here for a second, we are starting to see real pressure on retail electricity prices in certain states. Not every state, but certain states in the country. And I highlight here just the top blue line and top purple line are the residential power prices for New Jersey and for Virginia, two states that had governor's elections last year, two states where the issue of electricity pricing became front and center. I mean, for those of you who might not be from the US, you may have heard of electricity prices as a political issue, something people care about. Historically in the US, people have not cared that much about power prices. Gasoline prices are more front and center, and they're higher. We still enjoy some of the lowest electricity prices in the world in the United States. So there's only, you boost them, but they're still off of a pretty low base. But this became really front and center in both those campaigns. And now there have been promises made in both states to find ways to cap electricity prices going forward. The other interesting political sort of development out of this, which I found kind of amazing, and I stole this picture from the Bloomberg photo archives as a bit of a keepsake because it has at least 2, maybe 3 potential presidential candidates all in one picture from 2 different parties. So you've got Doug Burgum, who's the energy czar in the Trump administration, Governor Shapiro of Pennsylvania, a Democrat, Chris Wright, the energy secretary, right next to him, Glenn Youngkin, who was the governor of Virginia until recently, and then Wes Moore, the governor of Maryland. So you got a lot of young political talent in this picture. What brought these guys together, which is, I live in Washington, the number of occasions where we see bipartisanship on literally anything is very, very rare. What brought them together was to complain about the cost of electricity in the PJM power market, because all of these guys, their states are in PJM. Meanwhile, Chris Wright at DOE is putting pressure through FERC, the Federal Energy Regulatory Commission, on the PJM market. They all want PJM to take action to try and cap prices. This is not a simple thing to do, but I mainly note this just because it's created some really interesting and unusual and important political bedfellows overall. I talked a little about the One Big Beautiful Bill Act, and I'm just conscious of time and wanting to take questions, so I'll jump through a couple quick other things. But one of the questions that does, of course, come out of all of last year, I kind of showed you guys the pictures of like how the world didn't end in 2025. So then the question is like, where are we going from the US perspective? There's a bunch of lines here, but I'll just say these bars represent our new forecast for how much wind, solar, and storage is going to get built in the United States. This was the line that we had before last year's passage of the One Big Beautiful Bill Act. We actually revised it lower right after the bill passed, and then there was some further regulation that came out from the Treasury Department that made us feel a little bit better. But basically, you're talking about 20% or so less wind, solar, and storage being built in the U.S. as a direct consequence of the passage of that law last year. You're not talking about the end of an industry by any means, but you're also not talking about the kind of growth that we had seen that kind of looked like that until there. And if we look at electric vehicle sales in the United States, I kind of alluded to this earlier, that we now think that EV sales are going to be lower. We thought we were going to get to about 50% of our cars having a plug in them by 2030. We now think it's probably going to be about 1 in 4 cars as a result. We're still probably, and frankly, that we might be more bullish than other people, given that we're tracking at about 11% right now. But we still think you can get there as you get more vehicles out on the road with more models and at better prices overall. In terms of emissions, and I'm going to finish up in a second, the week after next, we put out an annual fact book about the United States every year, and it includes our emissions estimates for the prior year. But the bottom line for the US is that if you look at the US over a 20-year period, we were driving emissions down pretty nicely all the way for about 15 years or so. That's this top purple line. And the main reason was because if you look at the different segments of emissions, the power sector was rapidly decarbonizing. We were rapidly closing our coal plants, replacing them with gas and with renewables of lower emissions, and that made a huge difference. We have essentially flatlined the last couple of years, and like our early estimate is we think that emissions ticked up a bit last year, and that's partially because we actually burned more coal last year than we did the year prior by a pretty considerable amount. How much that is policy driven, how much of that is market driven, I still think it's more market than policy driven, but nonetheless, the sort of long-term decline in power sector emissions in the US appears to have halted. I don't think we're now on a 3 or 4 year stretch where things have not gone down. And I think it's worth noting. Nonetheless, we probably built a record amount of renewables last year overall, but still coal burned more. All right, I'm going to finish real quick with a couple quick things. Again, I'm here from Washington, so I may be preaching to the converted, but I feel like we got to remember, like, climate change is still out there. It's still happening. It's still a major problem. It's not something people want to talk about in the context of energy right now, but it will not go away. And we'll continue to have events that will remind us of it. So last year, we had about $1.3 trillion in weather events globally, the large majority of which were in the United States overall. This has real implications for homeowners insurance. Joe mentioned that this is an issue I worked on a lot at the Treasury Department. This, as we go back into the realm of politics for a second, I'm convinced that homeowners insurance is going to be one of those issues where consumers feel climate change in their pocketbook in a way they have never felt it before. The costs that we're seeing and how much they're going up is very, very rapid. In some cases, many cases, people are losing their homeowners insurance. This is a considerable portion of people's spending in their households, and it makes a big deal. And then I'm just going to finish here with one quick note. So one thing we do look at every year is what is the ratio between the amount of capital that's going into the supply of clean energy versus the supply of fossil fuel energy? And ultimately, if you want to really decarbonize the energy system, you need to get up to a multiple of, like, I think it's 3, maybe 4 or 5 to 1 ultimately. But we are past an important sort of threshold where it's no longer a 1-to-1, but we're actually investing more in clean energy supply than we are in fossil fuel supply. And we crossed that threshold a couple of years ago. Last year, it actually ticked up just a slight bit. So it's at about 1.1 overall. So those are things that can kind of make you feel better about the world and that we're kind of doing the right thing. Let me finish off with one thing that will make you feel much worse about the world, which is that, like I said, $2.3 trillion, a lot of money. And the rate at which we've seen investment rise is actually largely tracked with what we at BloombergNEF have been forecasting for the last 10 years as we've been forecasting adoption rates. So we're pleased that it's on that path. The problem is that if you want to actually get at the climate challenge, and we've done the modeling out to to 2050, but just even through 2035, we need to have a step change up where we're starting to invest about over $5 trillion a year, starting basically now, and then get up to about $7 trillion in the next decade. So like if you want to do anything that gets you onto a 1.5 degree or even 2 degree warming path, the level of activity has to really double very, very quickly. So the good news is there's a lot of momentum. There's a lot of things happening. The bad news is that if you don't have further policy pushes, you definitely don't get there. And so with that, happy to take any questions you might have.
Great. Thank you. So let me kick things off before we go to questions from the audience. You talked a little bit in the context of the United States how the One Big Beautiful Bill Act phased down early, eliminated a lot of the support for clean energy, especially in the power space, in EVs. And you noted how you updated your assessment about sort of what the build in clean energy is going to look like, and especially in renewables in the power sector. I'm curious about another sort of policy lever that's been pulled by the current administration, which is how to think about siting, federal permitting, et cetera. We've heard a lot about how different, especially like offshore wind projects that were like almost finished have been stopped. They've been going back and forth in the courts. What kind of impact that has when you look out and you're doing an assessment of the impact on the power system? And part of that could be just mechanical. We know what projects were sort of planned and then they got canceled, but wondering if you're getting a sense when you speak to those in the private sector about whether it's having a chilling effect for planning of the next project that's not public yet, but you realize it's just not worth our time because what look like these now large shadow costs of working through the regulatory apparatus when it comes to energy infrastructure side of it.
That's a really good question. I talked about the sort of, let's just put it this way, the kind of above board policy changes, the kind of conventional policy changes that the Trump administration has made that has involved things like, legislation or regulations. There is what I would call sort of the below board efforts, which is, for instance, as Joe just mentioned, we have 5 major offshore wind projects under construction in the United States off the coast of the East Coast. Right before Christmas, the Trump administration sent a letter, all 5, and said, you have to stop work because your permits aren't valid. I don't know what the exact reason was. Fast forward over the course of 30 days or so, all of those projects went to court, challenged it. All 5 projects received court orders that they could continue, or essentially there were injunctions that blocked the administration's move, and those projects are back under construction again. But that's probably the most egregious example. Even further below the radar than that, as Joe alludes to, we're definitely hearing anecdotal stuff like, oh, I need this kind of a permit to run a line across this piece of federal land. Usually it's just like a rubber stamp and the Bureau of Land Management just drops me a letter and off we go. There's a lot of slow rolling that's going on now in terms of the way projects are being handled. It's not a positive thing. It'll probably result in more litigation. It'll probably raise costs because especially these offshore projects, every day that these projects weren't building, for instance, was costing millions of dollars. Those costs eventually will get passed on to consumers, right? Because the other thing that's going on over here, which I talked about, is that the demand for electricity is rising really, really quickly. And renewables are basically the next megawatt to get added to the grid in most cases. There's a lot of talk in this administration about, whoa, we're just going to build all these new natural gas power plants. We have plenty of gas in the United States. That's not the problem. The problem is there aren't enough turbines that can actually convert that gas into electricity. So we're seeing all kinds of weird things going on where people are trying to get diesel generator backups and all kinds of strange things. But ultimately, I do think that the market dynamics of more demand for electricity will probably work some of that stuff out, but some combination of lawsuits and overall demand means that the market will keep going overall. Because the other pressure that the administration is facing, and you saw that with the picture with Chris right there, is electricity prices are rising in the United States in part because of data centers. And if you have a squeeze between supply and demand, you need more supply. And so as much as the administration says terrible things about wind and said less about solar, I think they'll recognize that if they want to address the affordability issue, and that is the really bigger challenge, that something has to give ultimately.
Thanks. Open it up for questions from the audience. Professor Hogan.
So you alluded to a problem which I hope you have more insight on. But long ago, my friend Larry Ruff was talking about the ongoing effect in Europe of their liberalization of the electricity market, the feed-in tariffs, and how much they were spending. And the main theme was, from our perspective in the United States, the best part about it was that it was over there and not here, because his argument was they're spending an enormous amount of money in order to make things look cheap. And they're actually not cheap. And so I'm glad they're doing it for us. I'm now glad the Chinese are doing it for us. You didn't tell us what the ratio is. I mean, they're spending a lot of money. They're earning some money, but they have all this overcost. How much does this cost China?
How much? Well, that is a really tough trillion-dollar question that I do not have an answer for, because in China, unlike here, a lot of the state support is not easily countable. It's often comes in the form of a very low interest or no interest loan from the China Development Bank, or in the availability of land in a certain province where the factory is going to be located. So I actually don't have a solid number for that. In the U.S., what you can do, obviously, is you can take the tax credit number and you can multiply it by the number of megawatts that were built, and you can get to some kind of rough approximation. But it's very difficult to determine that. And, to be clear, the Chinese have viewed this as a strategically important industry. They want to be dominant in it. And if you look at their successes in exporting vehicles of all sorts, it is a tremendous success. So they don't seem to be too hung up on the price. But your basic point I agree with, and I think we certainly we owe a debt of gratitude to both first the Germans and then the Spanish. The Czech had feed-in tariffs. Then China responded by scaling a market to the size that we've never seen, and now we enjoy the economies of scale that are enormous. But to be clear, that number for renewable build that I show here, I mean, basically starting sort of more or less around here, there are no tax credits for solar from this point on, and for wind, same thing. So it's, those things will be subsidy free in that regard by that point.
Thanks for the very clear presentation. It seems like there's a bit of a kind of coming together of the clean energy or the climate folks and kind of the current reality of where can we actually move forward on? And that's excitement about nuclear. It's about geothermal, and to some extent, just like gas is cheap. Yeah. Assuming we can overcome that supply elasticity issue and get more turbines out, which I'm sure will be able to happen. Are you starting to see that in the data along those three dimensions, that we're actually seeing more investment in there and more projects going in the interconnection queue and that type of thing? So
maybe take them one by one, which is and I could have and should have included a slide on nuclear, because it's an important part of the story, and there's really a couple pieces. There's existing nuclear reactors, which as of 3 or 4 years ago were saying they were going to go out of business, but now they're signing giant contracts to supply power to Meta's new data center. So we have about 100 gigawatts of existing nuclear in the US. It's about 20% of our power. Frankly, so long as those plants can keep getting relicensed, they will, because we have enough demand there. The other piece, though, is these small modular reactor technology companies like Oklo and a bunch of these others. There's an enormous amount of interest, certainly from this administration, of being supportive of that. We have tech companies that are signing long-term power purchase agreements with these nuclear startups to provide power in a couple of years from them. And that's great. I will say that I've been doing this for a while. These companies, most of them are not new. And a bunch of them were supposed to have small modular reactors online by now, and they missed those timelines as well. So from a climate perspective, I would love for those companies to be successful, but I think I wouldn't place too many eggs in that basket. Geothermal is a really interesting one. Historically, conventional geothermal has had some downsides, namely that the projects get built and then they start to have declining power rates over time as you deplete the resource. these new companies they're coming along, like Fervo, which is going to IPO, I think, pretty soon. They claim to use the same technologies as fracking to provide power, and so in theory they could go to more sites. One thing I would note about fracking is if you look at the production out of fracking projects as well, they also look like this. You go like you drill the well, you start producing, it looks like that, and then it just starts dipping over the next 5 years. So then you got to go drill another well, and you do the same over and over and over again. And you look at the charts of production around oil and gas, it looks like that. That's the potential downside of some of this newfangled geothermal. But again, if it can provide baseload zero energy, great. More power to them. What we'll have to see. And then the last thing on gas, I'm not maybe as confident as you are about the ability to add more gas-fired turbines. I mean, if you're the turbine manufacturer, life's pretty good right now. The price of these turbines is like up 50 or 100%, depending on who you're asking. The amount of capital investment you have to put into building out more turbine manufacturing is pretty substantial, and it will take at least 3 or 4 years before that comes online. The problem is there's really long time cycles related to natural gas and natural gas turbines, and you can see why some of these manufacturers might be a little antsy about like making that long. Just because Trump loves gas and because the market's desperate for more energy doesn't mean that fast forward 3 years from now that conditions might not be potentially pretty different.
Thank you so much for the presentation. I had a question about energy efficiency gains and where you see those projecting, especially in emerging markets, Sub-Saharan Africa, South Asia, Southeast Asia, due to increases in populations. And then the second question relatedly is, do you see a scenario in which we're able to reduce global energy consumption because of energy efficiency gains to reach a 2 degrees Celsius scenario?
On the second one, I think we in our, and I'm happy to, I should follow up with you and send you our long-term forecast because they have certain assumptions about just general energy efficiency. And it's a really good point because if you look over time, like we produce this report on the US every year, and every year it shows that the US has become more energy productive, as we say, which is that per unit of GDP, we're like the GDP rises at a certain level, energy consumption typically rises at a slightly lower level, and we become more productive overall. And I think it's like a 1 to 2% gain per year, and I think that's what we would probably be forecasting going forward. I would have trouble thinking in terms of the climate challenge and there's enormous demands for new energy that you could get there entirely on energy efficiency. Again, though, as we think in the short term, next 5 years, I think one of the great mysteries of AI is how quickly can you improve the efficiency of these data centers? Because all of that whole world of like massive buildup and the scramble to build more power plants, that could all fall right on its face if it turns out that these chips just get super efficient really quickly.
It seems like a big variable in this transition is how developing countries start investing in these industries. And it seems like that's ticking up, but I guess it's probably harder to forecast and much earlier in stage, given that it's not policy driven and more of a recent trend. So how do you think about developing country investments and broadening of this transition to developing countries?
Thank you. That's a great question. It is hard. And I would say it's challenging, but in some ways there's some kind of wonderful things that you can miss these days. Like out of nowhere, I can't remember what the total was, like Pakistan installed like, I don't know, 10 or 20 gigawatts of solar. There are some things about this energy transition, these technologies, which quite thankfully is fundamentally organic and bottom up. So a lot of, frankly, this world and my world in Washington and the World Bank world and the multilateral development world is always like, how can we figure out how to set up a facility to build a big power plant in this developing country? Honestly, these countries, it's just like you just import a bunch of solar and you just start putting it out in people's roofs and it starts changing people's lives. And they do it, as you say, without the implications of policy at all. From a forecasting perspective, it's really hard for us to try and figure out what that next country is going to be overall. But nonetheless, happy to share sort of our forecasts that we, as best we have been able to develop them. But if you just look at if you look at the progress of the multilateral institutions like the World Bank or the Green Climate Fund, let's just put that, particularly with the GCF, if you looked at what they've achieved and you map that forward, you would have no faith that the problem would ever get addressed.
Thank you. I wanted to pick up on your point about PJM, as I'm really interested in the crossover between PJM and RGGI, the Regional Greenhouse Gas Initiative. I know there are 3 states that are currently in both, and then Pennsylvania left RGGI last year. And it seems like Virginia might join this year. So I wanted to ask your thoughts about the politics of RGGI, given what's happening in PJM.
Really good question. So for those who don't know, that RGGI is the Regional Greenhouse Gas Initiative. It is I think I'm trying to remember the number. Probably how many states are in, 10 states that are mostly in the Northeast, that it does, that where there's a price on carbon related to power sector emissions. I frankly worry about RGGI because in the context of what is a increasingly heated discussion around power prices, some of the RGGI prices have started to tick up and are becoming actually material. For a long time, they were very, very low. And I suspect that will start to put some political pressure in different places. I don't think we've heard a particularly lot of positive things from Governor Shapiro of Pennsylvania, and Pennsylvania is a major emitter within this region. So I don't think you'll see them jump back anytime soon. Virginia, Spanberger is talking about it, but also talking about wanting to redistribute the proceeds from RGGI in some kind of progressive potential way. But frankly, I do worry that if the kind of blowback on retail power prices gets hot enough, then RGGI will come into frame in a number of states. And so, watch this space, basically.
So a comment and then a question. First, a comment about Pakistan. I'm advising 2 MPAID students who are looking at this issue. And part of it is that while they have built a bunch of centralized, I think primarily coal-fired power plants, a lot of it supported by China, I think previously through the Belt and Road Initiative, they just weren't very good getting the power to people's homes in a reliable way. And cheap solar panels made it easier for people to then decide, I'm just going to buy panels and put them on my roof so I can actually have power when I want to have power during the day and have a little bit of storage perhaps with that. So you've seen this huge surge, like you noted, in investment in solar. It's actually putting more pressure on the power companies and the distribution companies because now people are actually buying less of the power from these plants that are on these long-term contracts that were built previously. But it's interesting thinking through in some places, if you can't reliably get power to the people, solar gives them an outside option to get around the traditional utility model that we've seen around the world. I want to build on Willow's comment regarding RGGI. When talking about some of the investment in clean energy, whether it's in China or talking about in the US, a lot of it was focusing on the role of the state in subsidizing these technologies. We do have carbon pricing in many parts of the world. Europe, I think the price is now on the order of sort of 80 to 90 euros a ton. But that's a lot higher than what we see. I think about a little less than a third of the world's emissions are covered by a carbon price. If you're covered, the average price is about $20 a ton. Do you see that price driving much clean energy investment? And if so, are there like specific markets you look at and you're like, that price might matter? Whereas in other places, you're like, that's just having a small marginal effect after you account for the other policy instruments.
I think in the EU it's been relevant for some time, and I think and by the way, thank you for the much better discussion around Pakistan, because I think that's a really important. And the question is, what's the next Pakistan, which I'm very curious about. Like, I think there's a bunch of other ones kind of cooking. But on carbon prices, yes, I think Europe, it's been material. The US, I have not thought so much. I think California, the prices are starting to rise and starting to become more material there. I think, though, to the question you were asking earlier, you careful what you wish for, because the moment it starts to become material, it also starts to become a political issue. And so we have, we're not quite there yet, but I think that could start to happen. But I think a lot of the other markets, I think Canada has a carbon price. There's a bunch of other places either the price is super low or they cover only a small segment of the market. It's not. Our carbon experts could probably pick a few other markets to answer that question better than I am, but generally Europe is number one.
Okay, so let me ask one more question before we wrap up. You're at a university where we like to do research in this area. You have this, incredible detail in the nature of your work, digging into the energy economy, looking at the different kinds of incentives for investing in this type of technology or that kind of technology across all these different sectors in different countries of the world. Where could research help sort of illuminate where you see certain gaps in our understanding about where the clean energy economy is, how it's interacting with the more traditional economy? Just kind of curious if you could give a few suggestions of like, hey, it'd be great if we better understood X and Y and Z that might inspire some of our students here in the room.
Wow, good question. Well, I mean, I have to sort of beat a dead horse on developing countries in Pakistan, but like insofar as what's happened there is organic, and I do mean organic in the sense that like suddenly solar's just so cheap it starts to show up. Thinking about what it is, how do you create more Pakistans? Because maybe it's not a giant loan facility from the World Bank, but maybe it's some kind of work. And to your point, if the local utility is now feeling stressed about their income, how do you make them feel more comfortable? We've certainly seen this in the context of things like mini grids, where you want to have in rural parts of least developing countries, you want to build a mini grid to serve a village. But then the utility gets upset because the utility says, "Well, I'm about to build a transmission line out there." Never mind that it's like never going to happen, but like there's always this command and control issue. So how you can get policymakers / utilities / other people in any kind of a state-run energy sphere to get comfortable to facilitate a kind of evolution or transition that is much more bottom up. So that's a big vague answer, I realize, but like I think that's kind of because a lot of this stuff, like the costs are going to keep coming down. The availability is going to keep going up. It's just not going to go fast enough unless we really make some efforts to try and facilitate that.
Right. So before we wrap up, let me note that next Monday, we're on vacation. I'll be on a plane going somewhere warm. But within 2 weeks from today, we'll be back here in Rubenstein 414. We'll be hosting Richard Sandor in a fireside chat. He's got a recent book that will discuss some of his contributions to innovations and how we apply financial insights, analysis, and tools to address climate change. So I hope you can join us for that. Finally, please join me in thanking Ethan Zindler for his insights and presentation today. That was great, Ethan. Thank you so much.
Thanks, Joe. Enjoyed it. Thanks.